And once again, we're recording. So JD, thank you so much for agreeing to do this. I know you've got a lot on your plate right now, not only with work, but personal life. But thank you so much for agreeing to do this.
Yeah, absolutely. My pleasure.
So JD just a week ago had a baby, or his wife had a baby. They've got a brand new 7 pound. How much did she weigh? 7 pounds.
7 pounds, 10 ounces.
7 pounds, 10 ounces. Gemma Schmerge. I always butcher your name. I'm sorry.
Yeah, Gemma Schmerge. That's a tough one. So no one gets it right. So no harm.
So congratulations. So he's
Thank you.
Very awake considering he has a week-old baby. Fair play to him. So JD is a broker in Cincinnati, Ohio. We met probably about, I don't know, maybe 2 years ago now, a year and a half.
Yeah, I think probably close to 2 years ago now.
Okay, yeah. So for anyone who doesn't know you, everyone should know you, but for everyone who doesn't, do you want to give a little brief background into who you are and what you do?
Yeah, absolutely. So I am a Cincinnati, Northern Kentucky native. Grew up here and went to University of Dayton. Spent a few years in the IT consulting industry before jumping into real estate in 2017 when I joined Marcus Millichap and the Andrews-Dickman Group here. So we focus solely on multifamily brokerage here in Cincinnati and up to Dayton, Ohio, down into Lexington and Louisville, and starting to spread west to Indianapolis a little bit and as far east as West Virginia.
Oh, wow. So what made you want to be a commercial real estate broker? What brought you into that?
You know, I was in a commission-based industry before this.
Mm-hmm.
So I was kind of weighing my options, and I've got a couple relatives in real estate, so I had some discussions with them and knew I always wanted a career where I could control my income. And the more efficient you are and the longer you work, the more you make, as opposed to being tied to a salary where you make the same amount no matter how hard you work. So I don't think there's any better industry than commercial real estate for that type of income platform, if you will. So was fortunate enough to find Marcus and Millichap and join a really good team and good group of guys to get me up to speed and help me get my feet under me, because it's not easy to get started in this industry. That's for sure. Yeah,
I'm sure. It's my wife has just started as a real estate agent, and that in itself as a residential real estate agent, that's challenging enough. But in the commercial space, it's more, it's a lot more sophisticated. It's a lot more challenging, I'm sure, to get started.
Yeah, absolutely. And for the first 6 months or so, your head's spinning, especially when you don't have a real estate background, which I did not. So it's like drinking from a fire hose, as we like to say. But it's been a great experience thus far, and we're continuing to grow the team and grow our numbers. And this 2020 has been an interesting year, but I think we'll be back on track here sooner rather than later.
Yeah, absolutely. You mentioned that you guys solely focus on multifamily, right? So what kind of do you do a certain size? Do you do a certain asset class?
Just apartments, anything 4 units and up, really. We sell 500 unit buildings and portfolios, and like I said, as small as 4 units. So me specifically, I focus in Northern Kentucky and on the east side of Cincinnati in the under 50 unit realm. And then we've got 6 other agents on the team who also have their niche and their target locations that they focus in. So collectively as a team, we pretty much cover all the bases.
Yeah, yeah. So up until March, whatever it was, 16th or roughly around that. How was the year? How did you guys see the year? Was it one of your strongest years yet in terms of transactions? And
Yeah, I think the momentum from 2019 was carrying over, and it was shaping up to be a promising year. And then we hit a little bit of a standstill there, obviously, as did the whole country. So I think during that time, it was just a lot of discovery and providing information for our clients the best that we could.
mm-hmm.
Projections of how we see things playing out. So it's been interesting for sure, especially for, someone that has only been in the business for a few years and came in at kind of the peak of the market and, didn't face a whole lot of adversity in terms of the market itself. But it's been a big learning experience for sure.
Yeah, yeah. Well, seeing as you touched on that, we might as well dive into that a little bit. Kind of, what do you guys? Yeah.
My my AirPods died. I got you on speaker now.
Okay, I thought we lost you for a second, but we kind of got what you were saying. So yeah, you good to go? We good to continue?
Yeah,
okay.
I'm good.
Cool. So yeah, as you touched on the pandemic there, how things have changed a little bit. We might as well go into that because that's an interesting subject, I think. What are you seeing in terms of buyers, sellers, maybe even a little bit on terms of, I'm sure you spoke to a lot of owners in terms of rent collections and whatnot.
Yeah, so collections have been, well above expectations. We talked with some of the largest apartment owners in the country in late March, early April, I believe it was, and they were projecting, collections to drop as low as 50% during the pandemic, and it's been nowhere close to that. Nationally, I think we're hovering right around 90% over the last few months, and Cincinnati itself, I think, is actually a few percentage points above that, around 93, 94%. So I think the stimulus is helping, and whether that remains true, we'll probably find out here pretty soon. But hopefully it's bought us enough time to let the economy get back on track, and the unemployment numbers will stabilize back to single digits, hopefully pretty soon.
Yeah. So I'm guessing you've seen transactions sort of somewhat drop off a cliff a bit during this, or not?
Yeah, they've definitely slowed down. Deals that we had in contract mid-March, if we were far enough along in the process, we still got them closed, but inspections were put on hold, tours put on hold. So a lot of that was just kind of put on ice for a couple of months. And, there were a lot of buyers, it seemed, that kind of pulling out of the market, and buyers that smell blood in the water, and they're waiting for all these foreclosures to happen. So that's yet to be seen. But I think, even some of my clients that were kind of pulling the reins back on acquisitions, now that we're a few months in, and a lot of people would like to think we're over the hump, they're starting to look at deals again. So from our perspective, it seems like things are trending in the right direction.
Yeah, absolutely. Did you see anything in terms of pricing? I'm sure it's changed a little bit now, but initially, was there any leeway in pricing, or was there a gap between buyers' expectations and sellers' expectations?
Yeah, I think for a while there, and maybe still, I think the buyer-seller gap is astronomical, and trying to bridge that gap is the whole challenge of our job. So
yeah,
I think there's still not enough data to really say, if cap rates have really changed because of the pandemic, or, what sort of discounts are appropriate for someone buying apartments or investment real estate in this market. It's still just too early, but you got to think there's going to be some sort of discount, even though, collections are only a few percentage points below where they were pre-COVID.
Yeah. I know firsthand personally from, obviously being a buyer myself and talking to you and kind of looking at some deals, it's challenging to try and understand where vacancy is going to go. Is there going to be some more bad debt? Are we likely going to have to, give concessions? So when you're underwriting, it's kind of really the unknown. I'm just speaking firsthand from my experience. You want to be aggressive and, go after deals, but at the same time, for me personally, it doesn't feel like necessarily the right time to be aggressive. Now, if a deal pencils out at a good vacancy and some, concessions and bad debt added in there, along with, maybe some little bit of increased expenses, because that's another thing that we don't know either. Are the cost of expenses going to go up? As materials going to go up? Is labor going to go up? Is the price of electricity going to go up? Is, I don't know. We really don't know. So, it's challenging. I know that firsthand.
Yeah, it is. And, hopefully things will be relatively similar to how they were pre-COVID. And, the underwriting hopefully won't have to change all that much. But, if you were okay buying a somewhat risky asset pre-COVID, I think it is certainly a good idea to maybe rework the numbers and be a little bit more conservative if you are buying deals at today's market.
Yeah. But I think multifamily has shown to be very resilient, as you talked about collections being so high. I think, it's the old adage, isn't it, that everyone needs somewhere to live now. It definitely can be affected, but with the stimulus money coming in, the extra unemployment and the 1,200 and, maybe people not being as bad off as we expected. Everyone wants to pay their rent. You want to stay in your apartment building or your house or whatever you're renting. So I think again, it's shown to be super resilient. And I think, as we touched on earlier, that's why it was such a big run up to it, because I think people understand that what a great asset class it is.
Yeah, absolutely. I mean, if you look at multifamily compared to, stock market or even other commercial real estate investments over the last 20 years, I mean, it's about as steady as an investment as you can make, proven by 20 years of data. So, while it seems like there is a lot of risk, especially here in the Midwest, I don't think the risk in multifamily is as high as, what some people believe it to be. If you're buying 3 and 4 caps in primary markets, that's a different story. But, with the average cap rate in Greater Cincinnati being above a 7 cap, it's a pretty safe investment.
Yeah, absolutely. And, if you want to be investing, where else do you want to be right now? Do you want to be in the stock market that fluctuates, 5, 6, 7%, sometimes more on a daily basis, or do you want to be in an asset class that you own brick and mortar, that you can look and touch and feel and understand that you have that income coming in every month as well,
Exactly. Yeah. And it's, I think it's proven to be a lot more recession proof than, some other asset types.
Yeah.
So.
Yeah, absolutely. Yeah. So you touched on a little bit earlier that you work with, you work about 50 units and under, right? That's kind of your space right now.
Correct.
So would it be fair to say that you work with a lot of newer investors and first-time investors as well?
Yeah, absolutely. The mom and pop investors, as we sometimes call them, some may own, a 12 unit, or, might own a couple hundred units of all properties under 50 units, or might be working with, a first-time buyer that's trying to learn the market and get their foot in the door and get a portfolio going here in Cincinnati.
Yeah. Yeah. And I think that's an interesting thing that we can maybe jump into a little bit further, just to understand that for any first-time buyers, people, who might be listening to this and, they've heard us talk about the great benefits of investing in multifamily, and they're eager to get in. And I'm sure you get it a lot. You get a lot of first-time buyers calling you, but I think it would be good for us to try and talk a little bit about how to work with a broker, whether it's you or if it's in a different market. It's not as simple as residential where, you just find an agent and, they're all looking at the same MLS. So it's not as important to create that relationship. And they're a dime a dozen, where it's obviously not the same in commercial real estate. So from your point of view, is there, I think it's important to give your side as well, as the broker is how with the first someone listening to this and thinking, okay, I want to get into commercial real estate, what would be some first steps that they can make to work with someone like you and, to gain that trust and credibility?
Yeah, I think some good first steps are just being specific with your goals and your criteria and what you're trying to accomplish, so that I can work with you to, help you achieve those goals and understand what it is you're trying to do and exactly what you're looking for. Because, we sell a lot of apartments, but for me to just blast out every deal that we come across isn't efficient. And, I like to know exactly what you're looking for, so that I'm only sending very specific and relevant deals, and not just bombarding your inbox with, 100 deals when 98 of them are irrelevant to what you're looking to invest in.
Yeah, I think, that's a great starting point. So that would mean knowing roughly how many units, what kind of purchase price you're looking for, what parts of town you like. It's easy, Cincinnati isn't the biggest city, but it's still big enough that there's plenty of different areas for you to know. So know what submarkets you like, what kind of returns you're looking for. Are you looking for an A-class property, a B-class property, a C-class property? There's no such thing as D-class, right? But yeah. So is that what you mean by that? Is that?
Yeah, I think you hit all the big ones. That's generally a good start. And then if I can at least narrow down some of those big ticket items, that's enough to get me started. And then, once we look at a couple specific deals together, then we can get a little bit more granular. And, providing me feedback with what you liked or did not like, more importantly, did not like about a deal, is the only way that, we'll be able to get a deal done. Because if I don't get any feedback, then I don't know why you didn't like a deal. And, there's a lot of people I've talked with that I've sent multiple deals, and if I don't get feedback, then I can't adjust the search for you at all, and I can't help you if I don't know what you're looking for. So my feelings won't be hurt. It's not my property. So if you don't like something about it, don't be scared to be transparent and, let me know what you don't like about it.
Yeah, absolutely. And I think also, I don't know what you think, credibility is important factor as well, right? Because you could have anyone's call you up and say, hey, I want to buy 40 units and I'm willing to pay this much for it. But that person has got to show the ability that they have the ability to close, that they have that money, however they're going to fund the deal, and that they know what they're talking about, right? You don't want to be wasting your time with someone who's telling you that they want a 20 cap and a 25% cash on cash return in an A-class property.
Right. Exactly. Yeah. It's, after you talk with enough people, it's pretty easy to spot the bottom feeders, if you will, that are looking for, an absolute steal of a deal, and it's just not realistic. So, I respectfully try to weed them out, or at least help them come to grips with reality. The needle in the haystack deals just are obviously not easy to come by. So if you're not willing to adjust to the market, then you're going to have a really difficult time building any sort of scale.
Yeah, and it's also that's an important point, I think, is understanding the market. You've got to understand the market that you're in. The California market is a lot different to the Midwest market, and you've got to understand that. So, going from one or vice versa, you've got to understand what kind of returns are expected, or what maybe the cap rates. And that, I think that's a fair question to maybe ask you, rather than say, I'm looking for this. If you were working with a first-time buyer and they said, what kind of returns are realistic and what kind of cap rate is realistic, that would be a fair question, probably, right?
Yeah, absolutely. And I think I would further clarify that by asking them if they're looking for more of a stabilized turnkey asset, or if they're looking for more of a heavy lift, value add renovation type deal, because the cap rates can vary drastically. If a building's 60% occupied and rents are $250 below market, you might be okay paying a 5 cap when there's 9 or 10 cap upside. But if you're buying a stabilized asset that you don't plan to increase the rents much, you're probably going to be targeting more like a 7 or 8 cap.
Yeah, that's a great point. Again, it's just, I think, having some knowledge before they just pick up that phone. And the great thing now these days, the internet, bigger pockets, whatever, YouTube, there's an abundance of information out there, almost too much sometimes. But you can spend a week or 2 or a month just educating yourself before you get in there, and then when you speak to someone like yourself, you'll be able to get that credibility and be able to hopefully create a relationship where you're able to bring them deals and they're able to further their investing career.
Yeah, absolutely. I mean, it's amazing how much information is out there, and you can hear stories from people firsthand that have built their portfolio over 10 or 20 years, and they'll tell you all their successes and failures and what to avoid and how to get started. So there's just a wealth of information out there for anybody looking to get started in real estate investing.
Yeah. I think I'd be interested to hear as well. I'm sure a lot of people, sort of, what are you seeing people having in that below 50 unit? What are they having the most success in? Is it buying a stabilized asset and just optimizing operations, or is it buying that value add property and increasing it, the rents, lowering it?
Yeah, I think I would say the most successful people are finding those value add deals and building that sweat equity, if you will. Mm-hmm. And I think that's the fastest way to grow and build your portfolio quickly. You don't necessarily grow quickly just by the cash flow from the property. I think the big hit deals come with buying the distressed property, and sure, they're going to come with a lot more headaches and problems and frustrations, but that's why they're probably going to earn you more money in the long run if you play your cards right. Because when you do turn it around, you either refi or sell, or do an exchange and turn an 8 unit into 16, and it's just a snowball effect. So we see a lot of investors doing that, but you've also got the people that have some cash on the sidelines, and they don't want to be in the weeds every day, but they want to park their money somewhere safe and make 10, 12, 14, 16% on their money, and but not have to deal with the headaches. And that's a great strategy as well. I mean, it all depends on your goals.
Yeah, that's such a great point. I think that going back to the first time on new investors, I think that's an important thing for you to understand as well. Do you have a great W-2 job that you're making a lot of money and you're able to save that, do you want then to be taking that focus away from your W-2 job as a doctor or lawyer or whatever? Is it better for you to buy a stabilized asset and just not have to worry about it so much, rather than having all those headaches and spend time on weekends and weeknights trying to organize the renovation work and all that, when you can just I always heard that it's better to concentrate on your high paying job if you have one, and then invest as passively from there as well, because your money comes from your great job rather than the investing.
Right, exactly. And I think so many people fail early on with investing because they buy, a 4-family, and they're trying to do everything with the property to make it as profitable as possible, when really they should take a step back and outsource some of the responsibilities, and there's a greater chance of them succeeding if you leave it up to the experts and free up the time, get rid of the headaches. And in Cincinnati, where we're more of a yield driven market, where our cap rates are on average about 7.3 in multifamily, so you have the luxury of being able to hire a third party manager and still cash flow the property. And I think people here, local investors, don't understand that in primary markets, you really can't even do that and still cash flow the properties. So I think it's important, if you're going to grow, you got to start to delegate and outsource some of your responsibilities.
Yeah, it's a team sport, right? You want to build your team, and without a team and having to do everything yourself, you're not going to be able to scale, because you've only got 24 hours in a day. And if you're trying to do everything yourself, how are you going to go from 1 property to 2 properties to 3 to 10 properties and scale?
Exactly.
If you have a 100 unit portfolio, trying to do all the maintenance work yourself, well, you're going to be a busy guy.
Yeah, if everything's a priority, nothing's a priority.
Right. I like that one. I like that one a lot. That's so true. You touched on it a little bit again there, the Cincinnati market. You want to talk to us? I know why I love the Cincinnati market, but yeah, why is the Cincinnati, easy for me to say, Cincinnati market so good?
Yeah, so
your opinion.
I think in my opinion, the reason people like Cincinnati is we're a safe place to park money, and the yield here is greater than a lot of other markets, and we're diverse. We've got 8 Fortune 500 companies. We're not solely dependent on any one industry or economic driver. So I think we're relatively recession proof compared to some other markets. Our population growth isn't ecstatic, but it's slow and steady. So all in all, I'd say we're just a safe market to place your money in, but there's certainly a lot of opportunities with, older product that you can buy and renovate, increase the rents, increase the NOI, and build a portfolio pretty quickly.
Yeah, absolutely. As you were answering that, I was like, wait, maybe I shouldn't have asked him that, because I don't want as little people as possible to know about the market. But I think that's a little late now, because it's a very, very popular market, I think, now, right? It's grown a lot. It seems like there's a lot more interest in it these days.
Yeah, it seems like it. And it seems like secret's out and it's gaining popularity quickly.
Yeah, absolutely. Well, great. I think we're at about, I think half an hour, 40 minutes, something like that on this interview. You've shared a lot of great information. I think it'll help a lot of people, especially newer investors who are looking to work with brokers, and I think that's, if someone's looking to look in Cincinnati, how would they get a hold of you, and Northern Kentucky? How would they get a hold of you so that they could?
Yeah, so you can go to adgmultifamily.com, or you can go to marcusmillichap.com and find me there, or you can contact Barry and he'll send you my contact information.
Yeah. Do you want me to share your email? I'll put it in the notes.
Sure. Yeah. Yeah. Throw my email in there.
I'll put all that info in there. Cool. Cool. Well, thank you so much. I know, like I mentioned at the start, that personally you're extremely busy now with a newborn. But thank you so much for making the time. I really appreciate it. It's been a really fun talk. As always, I love talking real estate with you. It's a lot of fun. I could do it all day.
All right. Absolutely. Thanks for having me, Barry.
Cool.